Like clockwork, Tom Lee continues to use more of BM&R shareholder capital to buy up ETH supply. In this video, I want to show you guys the dip that Tom Lee purchased and the unique strategy that he used this week, unlike what we've seen in other weeks previous, and the surprising result that this had on BM&R. So first up, during the week, we ended up seeing ETH token price go from anywhere from $4,080 per token all the way to $3,680 per token, okay? But this unique strategy that we're going to talk about here in a second ended up spiking up BM&R share price over 7% on the day. So to understand what he did, we first need to understand where we are. Currently, they have 3.2 million ETH at an average price of $4,022 per ETH. This is not their average price. They don't actually disclose that, but we know where they are whenever they actually announced this report, which leads to $13 billion. Okay. On top of that, they also have 192 Bitcoin, $119 million in 8Co holdings, and cash of $219 million. Now, if you guys watch this show, the update for BM&R each and every week, you'll know that that cash not only rose, but so did the ETH holdings, which means that they had to dilute even more and raise both a cash stack and their Ethereum. So far towards the goal, ETH's total supply actually went down this week, meaning they burnt more than they issued. BitMine also bought more Ethereum, and so they are now at 3.68% of the total ETH supply, or 54% of their goal of hitting 5% alchemy of Ethereum. Tom Lee had this to say: "The crypto market saw one of its largest deleveraging events ever last week, and this put downward pressure on ETH's price. Open interest for ETH sits at the same level as seen on June 30th of this year, when ETH was at $2,500. Given the expected super cycle for Ethereum, this price dislocation represents an attractive risk reward. We acquired 203,000 Ethereum tokens over the past week, pushing our Ethereum holdings to 3.24 million, or 2.7% of the supply of ETH," said Tom Lee. "We are now more than halfway towards our initial pursuit of the alchemy of 5%. He also went on to say, "BitMine continues to attract institutional investor capital as our high liquidity is appealing. The combined trading volume share of BitMine and MicroStrategy, or just Strategy now, is 88% of all global digital asset treasury trading volume. We continue to lead our crypto treasury peers by both velocity of raising capital, net asset value per share, and by the high trading liquidity of our stock." Now, that's extremely important. This is what's going to lead BM&R to continuously be more and more expensive than their peers, is if they can hold a better net asset value per share than their peers. We also have to see how this changed. That not only did ETH end up lowering in price week over week, but because the amount of ETH and the selective purchases that BM&R has made, it actually increased the total ownership of ETH overall. So we went from $12.6 billion in ETH holdings to $13 billion, even though ETH price has actually fallen. If we start to see both the Ethereum price start to go up in this super cycle and they continue to buy more Ethereum tokens, well, that's whenever we're going to start seeing this value accelerate. Currently, as of this screenshot, BM&R is trading at $53.34, or a market cap of $15.2 billion, or only 1.16 times market net asset value, which is some of the lowest points that it's actually traded at. However, it's also not including cash orbs or Bitcoin holdings. The interesting part is where they purchased their ETH this week. There was a report from Look On Chain, which is a very credible source, that found that BM&R bought a large purchase, $281 million of ETH on October 17th. Okay, so if I go back and look at Ethereum's price, October 17th was this massive dip. There still was some reports that they purchased on October 15th and some reports afterwards as well. But if we end up seeing that they ended up raising $115 million in cash, but they also acquired 204,000 ETH, what I assume to be roughly $3,800 because of the large dip purchasing that they did on the 17th of October, which means they spent $775 million on Ethereum, but also raised $115 million in cash, meaning They raised $890 million to do all of their purchases. The old assumed shares outstanding was 292 million. It looks like they diluted shares by roughly 17.1 million more shares. Now we're at about 310 million shares outstanding. If they are constantly diluting at a market net asset value that's less than what their stock is actually worth, well, then that would be bad. But if they can sell their stock at a premium to buy ETH that's actually worth less, that actually increases their market net asset value. So, as of the time of recording this video, at $13 billion market value of their total ETH, on their total outstanding shares of 310 million, it shows a market net asset value per share of $42.02 on just their Ethereum, not on Cash, Orbs, or Bitcoin, okay? Which would lead to a couple more dollars on top of this. But $42.02 is the magic number. I also wanted to talk about what's happening in crypto and Ethereum right now because it's very interesting, but the best person to describe it is Brian Armstrong, the CEO of Coinbase.
I'm here in Washington, D.C. again, fighting for your rights to try to get some market structure legislation passed for crypto. This would be foundational, just like we did for stablecoins a few months ago with the Genius Act. Market structure legislation protects all the other non-stablecoin crypto assets like Bitcoin and Ethereum. The Senate is strongly supportive of getting this done. The members that I met with on both sides of the aisle are ready to get this legislation passed, and there's draft text now being exchanged back and forth and with the industry for comment, which is great. We saw a lot of alignment today. Now, of course, this hasn't stopped the big banks from trying to throw a wrench into things, and they're trying to ban rewards on stablecoins. The members of the Senate who I spoke to, they're not going to let that happen. That was already litigated and decided in the Genius Act for stablecoins. They're not going to bring it up again. But barring these little details here and there, I think this thing has a good chance of getting done. I've actually never been more bullish on market structure getting passed. It's a freight train leaving the station. So we're going to keep showing up and fighting for your rights.
Now, how great is that? Some real clarity on things like Bitcoin and Ethereum rather than just stablecoins, which could potentially lead more companies to build on Ethereum, setting up more L2s, working with other companies, right? And actually allowing this to become extremely mainstream. Now, if BM&R is continuing to acquire Ethereum at this point, before this bill actually gets passed, before the building is actually complete, that could be very exciting. However, it's not stopping companies from still building elsewhere. Robinhood is tokenizing nearly 500 US stocks and ETFs to allow access to EU users, which have already been purchased up to $8.5 million as of October 18th. We'll continue to track that to see how the engagement is actually going, but that is all on Ethereum as an L1, Arbitrum as an L2, but that all goes to benefit BM&R's strategy. I talked about this before, but seriously, I can't highlight enough how just big this is. Alipay has 1.4 billion monthly active users, okay? They process trillions of dollars and have millions of merchants, and they just completed their own L2 network, Jove, which they are going to be using to potentially help with some products with Alibaba and Alipay. And the chain that everyone continues to build on is Ethereum. Not only do they have the most amount of developers, but the speed at which they're adding new developers is the highest on Ethereum and the rest of their L2s versus any of the other chains in the entire crypto industry. So Ethereum has the lead and they're expanding it constantly, okay? And BM&R is the best way to play that sort of investment on Ethereum because of their velocity and ability to continue to stack on more and more Ethereum. So for me, I continue to buy this dip while Ethereum is down, but you have to believe that Ethereum is going to continue to climb over the rest of the year, over the next few couple of years, and that's the way that you see this strategy working. If you don't believe in Ethereum, don't trust me on it. You need your own conviction here. But if you guys want to see more updates like this and what I'm doing with my own investments, please hit the subscribe button down below. But until next time, bye for now.